Hi, everyone, and welcome to today's webinar, Precious Metals, Cash, and Stocks, essentially Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. We're the nation's largest precious metals dealer, and for over a decade, we've been helping countless numbers of Americans like you and I to sort through the noise in the market and protect their retirement savings with physical, tangible gold and silver. And today, we're here to talk about gold, silver, the economy. Specifically, we're going to be focused in on the current economic conditions like inflation, devaluation of the dollar, government debt, and interest rate pressures, and how that can all impact cash and stocks, and of course, how precious metals provide an appropriate hedge for what we're currently going through and entering into. And we'll, of course, look at how you can invest into precious metals inside of a qualified retirement account or through a cash investment where we ship gold right to your door. So we'll break down the economic landscape, how you can invest into precious metals, why you should, and we'll help you get to know our company and why American Hartford Gold is the right choice for you. So take a minute, get settled in. We're going to let a few more people join the stream. And while we wait, love to hear from you. If you want to write a comment, let me know where you're watching from and whether you've bought gold before, if this is your first time, and whether or not you've joined us on a previous webinar. It's always good to have you coming back. We do these monthly just to bring you updates on the market, help you get a good sense of how to invest. And then also let me know what brings you here today. Is there something that you're seeing in the economy that has you specifically looking at precious metals? Or is there something specific that you're joining us for that you're hoping to learn about? That's always helpful. Now, one note is we do have a new app. You can go to AmericanHartfordGold.com/app. Download that. It can let you put in price targets. You get updates on news and information that's going on in the economy. You can watch all of our past and future webinars and just really stay up to speed on what's happening in the precious metals market as well as with our company. It's a way for you to just keep up to date and interact a little bit here. So AmericanHartfordGold.com/app, or go to the App Store and search for American Hartford Gold, and you can download that. It's a great tool to just keep in your pocket. Now, it's great to have you all here. We have Jonathan, hello from California, Harry from Minnesota. Great to have you guys. Again, we'll let everybody kind of get settled here, but before we get into the heart of today's webinar, I'm Machi Block, Senior Director at American Hartford Gold, and my job is to help people like you and like me to gain an understanding of and to invest into gold, silver, and precious metals. So today, I'm really excited to take you through the essentials of owning physical precious metals, why they really are such a crucial cornerstone of any well-built portfolio in this current economy. And that's no doubt why you're joining us. In our opinion, it's more important now than ever to understand how gold and silver really serve as a financial safety net. There's so much happening in the economy and the markets right now, and this gives you a sense of confidence and real wealth that you just can't find anywhere else. So very important. We're going to really help to understand why that is. So whether you're a seasoned investor or you're really just beginning your journey, our goal today is to provide you with very clear, actionable insights on how to secure your investments with gold and silver, and of course, why you should as well. Now, at any point during this webinar, if you want to chat directly with our account executives, we do have them on standby, ready and willing to take your call. You can call the number on the screen, which is 866-607-2447. And you can have a more in-depth, specific conversation. And again, we do have account executives standing ready to help. So leave your questions on the message board. I have some moderators that are helping me, and they're sending me messages periodically. If you do have questions, gives me a sense of how to tailor the webinars as we go forward. If you have a very specific question, one of our moderators might pull you into a side chat just to answer your question more one-on-one, so be aware of that. And then keep in mind that anything you write is very helpful, again, to help us to know how to tailor these webinars in the future, what's important to you, our clients, and what are you looking for here. So even if you think I'm going to cover it, leave it in there. It's good for us. And then also, very important that I mention, this is obviously not financial advice. I don't know your situation. Can't give you advice on, sell this stock or do this or that. I'm just here to help you get a sense of what we're seeing in the economy, the markets with gold and silver, where the projections are, and help you make sense of this. Every decision is yours to make, but we want to guide you to making the best decision for yourself by giving you valuable information. So it's great to have you here. Now, really quick, over the last year, gold was up 64%. Silver went up 142% last year. So huge growth in the precious metals market. That's why it's really been on everybody's radar. It's rare that we see those kind of performances, but here we are. And this year we started out very strong, but with the turmoil in the markets and of course the war in Iran, we've seen a pullback and consolidation in the precious metals market. Gold and silver have pulled back from about $5,500 an ounce on gold to about $4,000, and silver from $122 an ounce to roughly, $60. And this puts us in the perfect position for entry. So if you've been on the sidelines, you're wondering about gold and silver, this is a great time to make that move. And of course, I'm glad that you're joining us for that. And so I'm just going to set the stage for what's happening in the economy and again, help you get a good sense of how these factors are driving the markets and gold and silver. And the first thing I want to look at is the dollar. The dollar is obviously in very significant decline right now. It just experienced the worst year in 52 years. It dropped over 11% last year alone. Now, we have massive money printing from our government. In fact, over 80% of all US dollars in existence have been created since 2006. I want you to think about that. Over the last 20 years, 80% of every dollar that's in our system, that's floating around the world, that's in banks, that's in investments, 80% of that has been just created out of thin air in the last 20 years. In 2006, we had about $6.8 trillion floating around as money supply. Today, that's over $23 trillion. It's just insane. We look at government debt. Government debt just hit $40 trillion. So each year, we're running roughly a $2 trillion deficit, which means that we're spending at least $2 trillion more than what the government can take in, and we just compound that to our debt. And then our interest payments on that debt alone are over $1 trillion a year. And that is the second largest line item in our government's budget, just second to defense spending. And this is a very unsustainable problem that we're walking into. Essentially, it creates a currency crisis and what's known as a debt doom loop. So to put that simply and break it down, we rack up government debt and we owe interest on that debt to leave it outstanding, right? So we pay that interest and we run deficits and we add more and more to our debt. And then our debt cost to service that debt and that interest grows. And so eventually we've added so much debt that our interest payments are so high that we're in a deficit even just to pay the interest expense. And then we're in this unavoidable currency collapse. Think about it in terms of racking up credit card debt so high that all of your disposable income is just going to pay the interest and you can't pay down the principal. And meanwhile, you continue to add more and more spending and that debt grows, which means that your interest payments are outperforming and exceeding what you can even take in. And so this is how nations are ruined. And it's exactly what the US is facing right now. We're on that precipice and walking to the point of no return. And with that writing on the wall, the whole world is watching. Foreign investors are beginning to pull away from the US dollar and US Treasuries. They don't want to invest in our debt. It's too risky. And they don't want our devaluing dollar as we continue to print so much money. Now, as a nation, we issue debt in large part through the sale of US Treasuries and bonds. So investors agree to lend the US money while holding on to essentially an IOU, and we give them a few percentage points in interest for the risk they're holding. Now, US Treasuries have always been considered the safest investment in the world. Our government was always good to pay, right? And everyone wants US dollars as we're the world reserve currency. However, what we've seen is that our bonds have been downgraded by Fitch and Moody's, which are two of the largest credit rating agencies, and other agencies over the last decade, multiple downgrades to our debt because it's just not as safe as it once was. So our debt is no longer considered a safe haven. Again, where US Treasuries were the safest place you could possibly invest, according to the most prominent credit rating agencies in the world, we're no longer a safe haven with US Treasuries. And so this leads to another currency crisis where if foreign investors are no longer willing to hold US Treasuries and they don't want to buy our debt anymore, then what we have to do as a nation is offer higher and higher interest yields on our bonds to entice investors to come and take on that risk. And so we add interest rates to that, and that higher yield means that we actually owe more money to service the debt that we're issuing. And so there again, we add more debt to our names, and this makes our debt even more risky and less attractive. And we again have to offer higher and higher rates to incentivize investors to keep coming back. And this is a very vicious cycle that we find ourselves in. It's one that we're currently walking towards, where can we get investors to actually buy our debt when our debt is at $40 trillion and we really can't offer high enough interest rates to entice them to come over because we don't have enough money to even pay that interest. And so, in fact, the world is really beginning to walk away entirely from the US dollar as the world reserve currency. As it stands, we're still the cleanest shirt in a dirty pile of laundry when it comes to other currencies, but the world is catching on to this. China is making trade deals outside of the US to settle transactions outside of the US dollar. And so we're heading into this multipolar world in the next decade. What we saw just even back in March is China and Brazil formed a trade deal. They're settling outside of the US dollar. Marco Rubio came out and said, look, we're really facing something new that we haven't for 50, 60, 70 years. And as we go forward into the next decade, the US will not hold the same prominence that it once had. We're dealing with a new system in place. That's something that we have to pay attention to. So the dollar and government debt and high interest rates are, having huge havoc on the confidence in the US system. And that's where, again, if treasuries are no longer the safest place to be, gold and silver has always been that real wealth, that real safe haven. And that's why so many investors are beginning to look at metals, and that's why we're seeing metals run. Now, if we look at inflation, that's also running up right now. It's in part due to the war in Iran, which has caused oil and gas prices to spike. It makes all goods cost more, but also the money printing and the increase in money supply has caused prices to rise substantially. The more money that's in the system, obviously, we need to see prices go up to kind of balance that out. And so we've seen prices rising consistently, and we're battling inflation really for the last 5 years, especially since 2020 when the pandemic hit. All of that money started to hit the system, and we just saw prices and asset prices go sky high. Now, interest rates on treasury bonds and T-bills aren't even keeping up with inflation. And so again, what used to be the de facto safe haven investment the world over is no longer even yielding a positive return when accounting for inflation. If inflation is running at 5 or 6%, and the yield on your investment is only 4 or 5%, then you're actually losing money overall. And so the dollar's in real trouble here, and central banks are loading up on gold instead of treasuries. 96% of central banks are buying gold right now. They're buying record amounts of gold for 6 years in a row. And of that, nearly 20% of those banks are actually decreasing their exposure to the US dollar, and the dollar is the only currency that they're decreasing their exposure to. That says a lot. And so what we've seen is that gold has actually replaced the dollar as the number one reserve asset in central bank balance sheets last year. We're right in the middle of a precious metals bull market, and we're still very, very early. So if the banks are buying gold, that's something that you and I should be doing as well. Follow the money, follow what the wisest investors are doing. These banks that are running nations and establishing fiscal policy, where are they putting their money? And that's something that we want to pay attention to. Then we look at the stock market. So on the other side of all this, we have the dollar, we have inflation, we have debt. Then we have the stock market, which is obviously where most people are familiar for investing. And the stock market is currently the most overvalued it's been in US history by nearly every single measure that economists look at. The average stock is trading 535% greater than its book value. In 1929, right before the Great Depression, that was around 400%. And so we're actually more overvalued today than during the Great Depression. We have the Buffett indicator, which is the total stock market value compared to the total GDP of a country. We're currently, with the US, at 237%. Anything over 120% is in the danger zone. Look how inflated the stock market is right now. And a large part of that is the money that's been created has flowed right into assets and is propping up everything in a way that's unsustainable. Now, we also have the price to earnings ratio, which is currently hovering around 22 to 23 times. So the price of a stock is 23 times greater than what the earnings of the company are. Historically, that long-term average is around 17%. We're so overvalued right now. Lastly, we have the Shiller-Cape ratio, which is kind of the cyclically adjusted price to earnings. And this ratio averages the S&P earnings over the last 10 years, and it's adjusted for inflation. It's currently hovering around 41, which is over 27% above its long-term historical average of 32, and then it's drastically higher than its 17 historical median. So every condition that we look at, to just boil this down into simple terms, the stock market is very expensive right now. And for some reason, all of us just keep putting our money right into it, and it's inflating it even higher. This is the largest bubble in American history by almost every measure that we can look at. These aren't justifiable numbers. They're not just figures that have only, we can find some reason that they're this high. These figures have only appeared one other time in history, and it was just before the dot-com collapse. So that tells us something. The stock market, in context, is running one of the largest bubbles in American history. All of the growth is coming from tech and AI speculation, and there's serious issues with that. We're in an incredibly volatile season, and many experts are expecting a huge crash on the stock market. John Hussman, who's a legendary investor, believes the market is at the most speculative extreme in U.S. financial history, similar to the 1929 and 2000 tech bubble. He warns that the S&P could face a decline anywhere from 55 to 75% when that bubble pops. Dr. Gary Schilling, a legendary economist, warns that a major recession is almost inevitable, potentially dragging the S&P 500 down by 30%. He cites weak consumer support and a lack of capital spending as primary catalysts. So again, what I want to just interject really quick is as inflation goes up, prices are going up. It's eating into the average U.S. citizen's savings. We don't have money to invest. And so obviously, as that capital dries up, this bubble becomes unsustainable. We have Jim Rogers, who, again, legendary investor and author. Roger predicts an inevitable, devastating global financial crisis driven by unsustainable global debt and a concentrated AI bubble. The vast majority of growth in the stock market right now is all wrapped up in AI. And there's no earnings on AI. So there's real fundamental problems that are happening here. Ray Dalio is the founder of the largest hedge fund in the world, Bridgewater Associates. He warns that the stock market is approaching speculative bubble levels reminiscent of 1929, again, 2000. It's driven by an expensive debt-fueled AI boom. And while he does stop short of timing an immediate crash, he cautions that the structural economic threats have pushed financial system past the point of no return, which means that it is inevitable. We're walking into a major disaster. It's just a matter of when. Jeremy Grantham, another legendary investor, he warns that the U.S. stock market is in the biggest investment bubble in American history and faces a potential 70% peak to trough collapse, and he wouldn't be in stocks at all right now. Now, the last one that I want to get into here, and I'm just trying to give you a canvassing of all these different investors and CEOs, hedge fund managers, what they're seeing in the market, so you know it's not just me sitting here saying it. Jamie Dimon, prominent CEO of JP Morgan Chase, the largest bank in the world, warns that a severe, unexpected market shock is building below the surface like tectonic plates, and it leads him to completely avoid buying the broader stock market or long-dated U.S. Treasuries at current valuations. Obviously, he's cautioning that while the current economy looks highly resilient on paper, so we can look and the market's growing, the economy's growing, investors are significantly underestimating a brewing confluence of fiscal and geopolitical triggers. So when you have these warnings coming from some of the most prominent positions in America, that's something that we want to pay attention to. And that's no doubt why you're here looking at gold and silver. We all feel it. There's something wrong in the economy. There's something wrong in the stock market. There's something wrong with the dollar. Where can we turn to for real preservation, real confidence, real safety with our investing? And again, with Jamie Dimon, here's the head of the largest bank in the world, essentially saying that he wouldn't touch stocks or bonds right now. And we know that we can't be in cash. And so what's the common sense play? It's just precious metals. And that's why so many investors, again, are turning to gold and silver. And again, gold was up 64% last year. Silver was up 142% last year. This year, we saw new record highs hit early on in the year. And then a normal correction in any healthy bull market is 2 steps forward, 1 step back in a period of consolidation. And that's what we're seeing as the market's pulling back. It's still up. If you look at where gold and silver were at in December, we're still above those levels. And what we're doing is letting the market cool off and consolidate. We're in a very good range for gold and silver. And then we had the war in Iran, which is very unpredictable, and it's causing inflation to spike. And so the Fed can't cut rates. And gold and silver love low interest rates, which obviously if the Fed were to cut rates, gold and silver will fly. The fact that the Fed can't cut rates is causing a temporary pullback in gold and silver. But gold and silver have actually done most of their growing in a very high interest rate environment over the last 5 or 6 years as well. So it's not like rates staying where they're at or even going higher is going to stop gold and silver from growing long term. Either way, gold and silver are going to win here. If the Fed cuts rates, gold and silver thrive. If the Fed raises rates, then we're actually going to face a debt crisis and an economic crash, and gold and silver will shine. And so there's temporary strength in the dollar as nobody can figure out what to do and where this is going to head. And foreign investors are going into treasuries, at least to get some nominal yield, but it's all very short term. And so the market, again, is giving us a break and a breath before resuming back up. So projections on gold right now, Goldman Sachs says they expect to see gold at $4,900 by the end of 2026. Bank of America, gold at $4,800 by Q4. Morgan Stanley, $5,200 an ounce. UBS, $5,200 an ounce. Deutsche Bank, $4,800 an ounce by Q4. You can see it's just unanimous. Everyone is projecting about a 20 to 30% gain in the safe, stable asset by the end of this year. And these are pretty conservative projections. And so again, the whole point would be to get in now while the market's down, and it's giving you an entry point. And now that we've established the market conditions, we'll kind of talk about the specifics with gold and cash and stocks and how these factors are impacting them. And then I'm going to walk you through how to invest into gold and silver. That's obviously the most important piece of this. Once you understand the economy and the risks that are facing us, then how these factors are changing stocks and the dollar and gold and silver, we can talk about how you, as someone watching the webinar wanting to invest into gold and silver, can actually take that next step. And this would be a good time if you do have any questions that I haven't covered yet or something that I brought up that you want me to go deeper into, just leave those in the chat and I can get to your questions as we go. But I just want to break it down more specific. When we look at stocks, inflation causes less savings for Americans, less discretionary spending, less money that can go into the stock market. And there's obviously less risk that's being able to be taken. If all of my savings are getting eaten up by higher pricing, I'm not going to take risk with the money that I do have. And when most of the stock market is risky plays right now, it's all overbought. It's so speculative. There's so much hype and excitement. If this dies out because people aren't willing to take that risk and put their money into something so speculative, the rally in stocks dies out as well. So inflation is having a huge, huge effect on where the stock market is expected to head. It's why a lot of these economists are predicting a major crash coming up. And we see that Americans, kind of free spending their money that they can actually put into investments or, have the ability to just go buy things. All of that is drying up at a rate that we haven't seen in decades right now. Then we look at government debt and how that impacts stocks. So government debt impacts the bond market, which we talked about. It breeds less confidence for people to get into bonds. Bonds are the lifeblood of any healthy market. And if money is not flowing into bonds, which is the conservative side of that, then we don't have the ability to prop up the stock market either. So interest rate pressure is causing higher rates. We can't afford our debt. We need higher rates to entice foreign investors to come in. It makes borrowing more expensive for companies and individuals. If rates are high, if the Fed does have to raise interest rates, then all of a sudden companies can't invest, they can't borrow, there's not this discretionary spending, and they can't hire or even invest. So again, the economy restricts with high interest rates. And this means lower earnings for companies and the stock market crashes, right? Lower rates, let's just say that the Fed is able to lower interest rates, it means that nobody wants our debt because we can't entice people to come over and buy it. And so therefore, we can stimulate the economy with more money flowing by lowering interest rates, but it exacerbates inflation. Inflation goes back up and we're right back where we're at right now. And so gold does very well in low rates because there's lower yield on conservative assets like bonds and CDs. And people view this as a much safer route to go, especially when inflation is at play, because they're not even returning positive on CDs or bonds or treasuries. And so you may as well go into something that's performing. Again, 64% last year, 142% last year. You look at a 4 or 5% yield on your bonds and treasuries and CDs, it's just a no-brainer, okay? And then we'll look at, cash and how these factors impact that. So cash is losing its purchasing power when inflation goes back up, right? Again, inflation is driving up prices, rising costs of good and costs of living. So prices go up and your dollars then are worth less because they can't purchase the same thing they once could. It's very simple. But what's worth noting is that we've all lost over 30% of our purchasing power just since 2020. And so if you've had cash just sitting in the bank, you've effectively been taxed 30% due to inflation. That's huge. We hate taxes, right? Nobody wants to pay taxes. You're automatically being taxed 30% just over the last 5 or 6 years. And so you have to invest your dollars somewhere to keep up with that decline. The dollar lost 11% last year alone. This was the worst year for the dollar in 52 years. And this means that you had to earn more than 11% on your investments just to keep up with devaluation. Inflation was around 4 to 6% last year. And so compounded, prices were rising on top of the dollar declining in value. And if you're just in a savings account or a CD or a bond or a T-bill, which are all considered safe and conservative, if you don't have high enough rates to give you a return that's greater than inflation, then you're still losing value. And so the dollar is in a really strong predicament right now where it just doesn't make sense to be sitting in cash or dollar-based assets. And what's really fascinating here is Kevin Warsh, the newly appointed Fed chair, said that, look, if we can get inflation back to the Fed's target of 2%, that's what they're trying to do with interest rates and why rates have been so high over the last handful of years. They want inflation about 2%. That still will represent an 80% decline in the value of the dollar over the average life of a U.S. citizen. So even if we're at 2%, which is good according to the Fed, you're still going to lose 80% of the dollar over your lifetime. So again, we can't just be sitting in cash. We have to be invested in something. Gold and silver are real wealth. Gold has traditionally been a safe haven investment in these times. And it doesn't yield a return like bonds or CDs, but it grows. Gold has no default risk. It's not tied to any single government. It can't be printed at will. And it's nobody else's liability. It's real money. It will always hold a base value because, again, it is real wealth. It's tangible. It's a physical asset that you can hold on to, that you can own. It's not a paper asset devaluing with the dollar. And that difference, that contrast is so important in this economy that we're in right now. As the dollar goes down, gold goes up in price, silver follows. And again, gold and silver in a very structural bull market right now, which is simply meaning that there's very valid fundamental reasons that the metals are growing and they're expected to go much higher. This isn't speculation. The drivers for gold and silver are high debt, currency concerns, ongoing central bank demand, devaluation of the dollar, and geopolitical uncertainty, just to name a few. And all of this is causing a general rising trend on precious metals over the last few years. And as long as your investment time horizon is in years, not weeks or days, now is an incredible time to invest in and protect with gold and silver. And so with that said, you're not early and you're certainly not late. You're right on time with getting into precious metals. And so we'll jump into how you can actually do that. We're going to talk about the ways that you can invest into gold and silver with American Hartford, why putting gold and silver into a retirement account can actually protect and preserve, and how you can do that. Or if you want to just have gold and silver delivered to your home, you can do a wire transfer, a check, and we'll ship gold right out to you. And so I'm going to break that down. But again, I just want to remind you that at any point in time in this, if you're concerned about what I'm talking about, you see the same things in the economy, you want to invest into gold and silver, you can just call us right now at 866-607-2447, and we can discuss all of this in more detail with you. We do have the account executives on standby. And of course, we'll get you a replay of the rest of the webinar. Download the app. You have access to all of our information. But I would just really encourage you, if this is resonating, just take the next step, call the company, jump on with a real person that can talk to you about your situation and help you take the action that you want to take. So let's talk really quick about the hows, right? At American Hartford Gold, we help you invest into gold and silver in two ways. The first is through a retirement account. So if you have an old retirement account from an employer, 401k, 403b, 457, whatever it may be, or you're currently employed and you have a retirement account through your current employer and you're over 59 and a half, you can roll those funds out into what's called a self-directed IRA. And the reason I'm giving you those stipulations, there's a little gray area. A lot of current employer accounts, if you're under 59 and a half, the company likes to keep those in their system. They won't necessarily let you move the money, but we can always call over with you to figure that out and just double check that. We have an entire back office dedicated to helping you move your retirement funds if that's what you want to do. But essentially what we do, an old IRA or 401k that has funds already in it, and you want to move that into gold and silver, we open up what's called a self-directed IRA. It's a quick application on our side. It's a type of account that allows you to hold on to physical, tangible assets, again, gold and silver, rather than just stocks, bonds, equities, and the dollar. And so we do that quick application with you on the phone, just ask you some questions, email it over to you for a signature, and then we'll schedule a custodial call with our back office. We'll call over to you to your current custodian that's holding onto your account. We'll help you liquidate the funds, get the transfer form submitted, and we're going to keep our thumb on the process the entire time until your account rolls over into the new self-directed IRA. It's a tax-free, penalty-free move. We do this very simply. We're doing it for, tens of thousands, hundreds of thousands of clients all the time. It's a very, very well-set system, and it's really easy to do. It takes a few days for the funds to leave your account and move into the self-directed IRA account. Once that account is funded, you'll jump on with one of our directors. They'll go through a full metals consultation, get to know what's important to you, your investment objectives, your time horizon, your liquidity needs, and we're going to build out a portfolio of gold and silver that's right for you. And then we ship that gold and silver to a private depository. So this is a third-party vault. It's outside of the banking system. You own that gold and silver. You can access it anytime you like. This physical, tangible gold and silver is actually sitting in a room with your name on it. Nobody else has claim to it. It's yours. But while it's in that retirement structure, it does have to be stored for you safely and securely. And it's about $250 to $280 a year for storage and custodial fees combined, depending on how you have it stored. But it's just a flat fee. It's very moderate. We're always going to cover the account setup and the first year of storage for you. And that just makes it very simple and easy for you to make this move with very little stress to yourself. So again, we have an entire department dedicated to helping you put physical, tangible gold and silver into your retirement account. So if you have an old 401k, if you have an old IRA, you have funds that are in there, you're concerned about them being exposed to the stock market, the dollar, you want to get real tangible wealth in there, it's a very easy move. Give us a call, 866-607-2447. We'll actually help you take that next step. So that's the retirement side. And again, if you have an account with your employer and you just want us to take a look at it and see if it is eligible to be moved, always tax-free, penalty-free to do so. Even things like annuities can be moved, pension funds sometimes. So we can explore that with you. Just give us a call and we'll set that up. Now, on the other side, there's the cash investing. So you have cash in the bank, or you have non-qualified funds, which means they're not in a retirement account. So it's a brokerage account or a CD or whatever it may be. You can take those funds and move them into precious metals as well. So it's a wire transfer or a check over to American Hartford Gold. You call us up, we'll get some personal information from you, build out a client ID, and get you account details where you can wire the funds over to American Hartford right through your bank. We'll get you the instructions on that. And then once we have those funds in, again, we'd go through a full consultation with you, talk to one of our directors, and we're going to build out a portfolio of precious metals. We ship that gold and silver right to your door. It's fully insured. We cover the shipping cost. There's no sales tax. Okay. Very straightforward. You'll sign for it upon delivery. We ship via FedEx in an unmarked package. Nothing says gold or silver on the box, so it's completely discreet. And we've shipped billions of dollars worth of gold and silver around the country this way. It's very safe, very secure. We just don't have any issues with that. So you'll sign for it. You take possession. You can do anything you want with the gold and silver. Now, what's worth noting, there's no limits on that, right? You can have as much gold as you possibly want. The minimums for investing in a retirement account would be $10,000. The minimums on the cash side would be $5,000. So anything above those levels, we can help you out with. Again, very simple. And then we have a buyback commitment to our clients. So whenever you want to get back into cash, let's say the market changes and you don't think that you need gold and silver anymore, we'll buy it back from you with zero fees on our side. It's very simple and straightforward. You just call us up, let us know that you want to sell back. We'll walk you through that process. We'll wire funds into your account. It's very straightforward. We have zero fees on that side. Everything that we do at American Hartford is meant to make it as simple and as easy as possible for you to get out of the dollar, into gold and silver, and then, of course, back into the dollar when you're ready to do so. So those are the two ways. Again, if you have cash off the side, you have money in a brokerage account, you're looking to get risk off the table, wire transfer a check, we ship gold right to your door. If you don't want to have it at your house, we can set it up in a private depository. That's always an option. And then if you have a retirement account of any kind, you want us to take a look at that, you want to roll those funds over and get them protected, tax-free, penalty-free to do that. Very easy process on that side as well. Most of our clients are doing a mix of both. It's just good to have a hedge in every department. Mindy says, a self-directed IRA, gold sent to the individual or held in a storage facility. Great question, Mindy. When you're putting gold and silver into a retirement account, it has to be stored for you safely and securely at one of the IRS-approved depositories. Now, these are third-party vaults outside of the banking system. They're fully insured, backed by Lloyd's of London, up to $1 billion per account holder. It does have to be stored for you safely and securely. Otherwise, it would be considered a distribution on your account. But what's really important there is in the IRA, if you ever want the gold or silver out of the account, you want to take possession of it, you can request it. It'll be shipped right to your home. You actually own it. It's yours. But you will pay taxes as if it was a distribution on the account, just like as if you wanted to take cash out of your IRA or 401k right now. You're going to pay taxes on that. Roth IRAs, you can do that with gold and silver. No taxes coming out on that. Obviously, works the exact same way. Joanna says, what is the phone number to call for information? It's 866-607-2447. That should be going in the message board for you as well. Jonathan says, I have a 401k. Do I need to liquidate my positions first and then give you a call? Jonathan, I'd say just give us a call right now, 866-607-2447. We have an entire back office dedicated to helping you liquidate, get transfer form set up, make that a very smooth, easy transition. Let us do the heavy lifting. You have enough on your plate. You're already concerned enough. You want to move into gold. Let us do everything for you. That's why we exist. Dina says, is it correct that you cannot keep physical gold or silver at home if it's in an IRA? Yeah, that's correct, Dina. I hope I answered that. It does have to be stored for you, but again, you actually own it. You can pull it out anytime. Anthony, what were the minimums again? So on the cash side, a minimum of $5,000. We can do any transaction above that. If you're less than $5,000, there's some good companies we can direct you to. We're just doing a little bit more of a large volume transaction, and that allows us to not have to charge any sales tax ever. And so 5,000 or above, we can go all the way up to 100 million if you have it. You know, there's no minimum, or there's no maximum, but the minimum is 5,000. On the retirement side, we have to have at least $10,000 to roll over or transfer over. So if you have an IRA or 401k or a 457 or employer plan with at least $10,000 in it, we can help you. Okay. And so we'll kind of keep going here. The one thing that I really want to impress upon you is, you know what's going on in the economy. You know how you can invest into gold and silver. Who do you go with? Of course, you're here with us, joining us. We appreciate that. You obviously have some level of confidence in American Hartford Gold. But what I really want to impress upon you is we're the largest retailer of gold and silver in the nation. Over $4 billion in precious metals delivered over the last couple of years. We've been in business for over a decade. I'd encourage you all to visit our About Us page. You're going to see a welcome video. You can see our president, our CEO. You'll see inside of our office, our shipping department, and you'll really get a sense of the company that you're partnering with here. No other company in the industry is putting themselves out that way so that you can actually know who you're doing business with. It's really important. If you want some information from us, our marketing department has put together these really nice packets that just give you a simple walkthrough on how all this works and some great detailed information. We can always send that out to you. But again, you're going to invest into gold and silver, and you want to go with the nation's largest precious metals dealer. You want to go with the name brand in gold and silver that has an established reputation, that has been in business for a long period of time, that can actually get you well taken care of, get you great entry points, and make sure that we're actually doing what's right for you in a way that makes sense. We really pride ourselves on client relations and education so that you walk away very confident and very happy. We've been an Inc. 500 award winner for the last handful of years. Full service team dedicated to making this a very smooth, easy transition for you, both in and out of gold and silver. A+ rating with the Better Business Bureau, Consumer Affairs, Trustpilot, Google, You'll see thousands and thousands of positive reviews for our company. You're in very good hands, and we're going to take great care of you. So if you guys have any other questions, please leave them now as I kind of wrap this up. We'll come back over to them. But you're really getting a good sense, again, of why gold and silver, how gold and silver, why would you invest with American Hartford Gold? There's a handful of good companies out there, but really, you're not going to find better service, better pricing, better education than coming over to American Hartford Gold. We want to make sure that you're well taken care of. And you know what? If you explore us and you feel that we're not the right firm for you, we're going to point you in the right direction to somebody else. But we're here to take care of you, and you can use us as a sounding board. And so again, take that first step. If you're concerned, you know that you want gold and silver, it's just an absolute no-brainer right now to own real wealth in the environment that we're in. Give us a call and at least take the steps to explore what that looks like. Now, everything that you're currently invested in most likely is tied to the US dollar. It's all priced in dollars, right? Stocks, bonds, treasuries, cash, it's all a dollar-based asset. And right now we're in one of the most critical times in American history. Again, we've printed over 40% of all the dollars in circulation within the last decade, 80% within the last 25 years. Our government has become a money printing machine, where trillions of dollars used to be an unfathomable figure in recent memory. Now we have $40 trillion of government debt. That is just unbelievable. If we were a business, our country would be bankrupt. And as the government prints money, if they rack up debt, the purchasing power of the dollar declines, and so too does confidence in the dollar system. That impacts all of us. It impacts the stock market going forward. It impacts the bond market, the stability of the US system. It impacts our cash. And it impacts gold and silver in a positive way. Americans are waking up month after month with our dollars purchasing less and less as inflation and spending creep up and the dollar devalues. I'm sure that we all feel that. Do we all have the wherewithal to keep the risk in the stock market bubble propped up for much longer? The reality of it is, it doesn't look like it. So now is the time to protect yourself. And you do that by buying gold and silver, which are inversely related to the devaluing dollar. And they're a great hedge against the stock market risk. Gold and silver are a global asset. They're not just priced in dollars, and they're real wealth. And they act as a hedge against devaluation. Again, 96% of central banks are buying gold. Why? You have to ask yourself, why is that? This is the first time in history we've seen that. They're buying record amounts of gold. Billionaire hedge fund managers and bank CEOs are saying to buy gold. So do what the smart money is doing and get a hedge with precious metals. There's never been a more important time. There's never been a better time. We're getting a great breath in the market to get into gold and silver and get out of our traditional investments, which are underperforming. Again, even if you were just all in stocks last year, we did 13, 14% on the S&P. That's a great year for stocks. Why did silver grow 142%? Why did gold grow 64%? Why are they expected to do a similar amount of growth this year? It's just an absolute no-brainer to own real wealth. And so as we wrap this up, call us now at 866-607-2447. You've hung with me to the end. I appreciate you being here. But now actually take that next step and get yourself protected, or it was all for nothing. I'm Machi Block with American Hartford Gold. Thank you for joining us. Give us a call today. We'll discuss how adding precious metals into your portfolio can actually get you protected in this environment. We'll walk you through those next steps and get you squared away.